my topic, which is on the GST. We have to take care, how we can take care about the foregoing litigation, which we can take care till today, on today as well. So one of the aspect, as we all know, that matching of GST 2A with ITC availed in GST 3B is an issue which was going on from last many years, and department has issued many notices on it. But certainly after the circular which the department has issued for financial year 17-18 and 18-19, that matching of credit was not required during these 2 years, and therefore the credit can be availed. However, the circular went away from the requirement, statutory requirement again, and it said that you require to obtain a certificate from the suppliers or the supplier's chartered accountant based on the value of the input credit of that particular supplier. So friends, we are discussing the compliances which we can take care for the financial year. So there is two aspects of it. One is that if we want to simply comply with the law and want to avoid any sort of litigation, and if our issue is not still raised by the department on GST 2A versus GST 3B, what we can do, we can check the unreconciled credit not only for 17-18 and 18-19, but for all past 5 years. Because in last, that's a different point of discussion, that how this GST 2A and 3B matching was required statutorily, from which date. So we can, what we can do, we can check the unreconciled credit of last 5 years. We can go, we can identify the suppliers, and we can attempt to take a certificate from those suppliers certifying that yes, they have supplied the services to us and they have paid the tax to the government. The reason behind is that section 16(2)(c), which is still under litigation before various courts, that if the supplier do not pay the tax, the buyer cannot take the credit, is still under dispute. And the future of this clause will definitely depend on the final outcomes of the writs which are pending before the high courts on this aspect. But to comply with, what we can do, we can obtain the certificate from the supplier. On the other side, if we talk about that how we can proceed in such type of litigation is, see, this matching of credit was certainly not required up to 1st January 2022 under the GST law. Secondly, the circular, although clarify that for the 17-18 and 18-19 matching is not required, but they have specified an additional condition. So we can certainly fight on that condition, that this requirement is not the condition for availing the credit under the law, and therefore it cannot be supposed from us after the 5 years of the purchasing from those suppliers. Secondly, that supplier has paid the tax to the government is certainly cannot be verified by the buyer from the available return 2A at that point of time. So we can argue definitely this matter, but if we are discussing about that how we can take care of the future litigation as of date, so we can certainly go for obtaining the certificates from the suppliers so that we can avoid any unnecessary litigations on this aspect. Now coming from the issue of GST 2A versus GST 3B, now department has evolved a new aspect of litigating the credit of the recipient. As we all know that section 16(2)(c), as I discussed, provides that if the supplier has not paid the tax, buyer is not eligible for the credit. Now what the department has started to do, department has started to check your GST 2A, which is always a dynamic and provide the up-to-date data from last 5 years. Now the 2A has started to capture even for 17-18 and 18-19 that how many of your supplier has not filed a GST 3B return. Now what the department is doing, they are scrutinizing your GST 2A and checking that if the supplier has not filed a GST 3B, then they are proposing to deny the credit. at first stage by issuing the ASMT 10, and definitely post submission, they will definitely going to reject it on the ground that since your supplier has not filed the GST 3B, we are presume it's equivalent that they have not paid the tax to the government, and therefore we are not going to allow you the credit. So friends, if you face such type of issue, so what we can do at this moment, not only for this 20 to 23, but for past 5 years, certainly I will again discuss two aspects of it, that what we can do to avoid any unnecessary litigation and what are the grounds available to us for fighting this matter. So first I will discuss what compliance we can take care of at this moment. Is that now our all focus has gone to GST 2B, because now the base of availing the credit is become GST 2B and we forget about the GST 2A. But the GST 3B filing status is available on the GST 2A and not in 2B. So the filing status of GST 3B is available in GST 2A. What we can do? Certainly, there are organizations which there are many few cases where the GST 3B have not been filed by the supplier. So what we can do? From last 5 years, we can check that how many vendors have not filed their GST 3B of last of the respective periods. We can do follow up if possible for us, and if they have they may submit us that they have filed the returns but not reflecting in properly reflecting in our 2A, or we may obtain a certificate that they have paid a tax to the government through DRC 03 challan on the supplies made to us and get it certified through their chartered accountant. So this is the way to avoid any future litigation. But on what ground we can argue this aspect of new emerging issue which is coming out among the field formation? First of all, friends, that to check whether my supplier has filed the GST 3B or not would made available to me only after October 2020. So prior to October 2020, I would not be in a position even to check whether my supplier has filed GST 3B or not. And with that, we can also argue that there is no mechanism available to me whether my supplier is paying tax to the government or not. So this is the argument which we can take. Secondly, as my learned friends are discussing, that focus has government made totally on GST 2B. So 2B is not giving me any data about the filing, whereas 2A is giving me the data about the filing status. And this third argument which we can take of the recent amendment, that from October 2022, the government has made effective section 38 and government has made effective section 16(2)(ab), which says that credit will be restricted as per the statement provided under section 38. And section 38 provides that a auto-generated statement will provide you two types of things, that what credit is available to you, and on the following grounds, which are the 6 parameters as discussed by Bibel sir, that on 6 parameters they will provide you that ITC is not available to you. Now the point is, when this statement auto-generated as specified under Rule 61 is the GST 2B only. So now this GST 2B is telling me that ITC is available to me, and GST 2A is providing me that GST 3B is not filed by the supplier. So there is a contrary statements provided by the portal to me itself. Now I have to rely on GST 2B based on section 16(2)(ab), read with rule section 38, read with rule 61, that whatever credit is made available to me through GST 2B is eligible to me. And this GST 2B credit is now also getting auto-populated in my 3B. So I can easily take an argument that the portal itself through GST 2B and 3B making me available the credit. Now you cannot deny this credit based on another argument that supplier has not filed his GST 3B. So this is very interesting issue going on, and definitely we can fight. But on the other side, if we want to comply it with, we can definitely check GST 3B filing status in our GST 2A and can take care of the and follow up with the suppliers to avoid any unnecessary litigation in the future. Now, friends, you must have heard about artificial intelligence, which the tax department is using to identify the tax evasion of the assessees. So as my friend Tushar has discussed about Rule 42 reversal, that we must take care of the Rule 42 reversal or Rule 43 reversal at the year end. Even after 5 years of GST and we are in the 6th year of GST, people are ignoring the Rule 42-43 reversal. And what is happening is that the artificial intelligence is applying very simple fundamental that if you have paid exempt services in your GST 9, but there is no reversal under Rule 42 column in your GST 9, then artificial intelligence is giving the data to the either audit department or the anti-evasion department or the DGGI, depending on the gravity of the issue involved in that. So they are throwing the information to these three authorities, and these three authorities has initiated the investigation in many cases only and only on the ground that you have not reversed the Rule 42 credit. Although it is very simple case that they may simply ask from the SSE that whether Rule 42 reversal is made, not made, and on what ground. But as all of us know, that if issues start only with the ground that we have not made the reversal under Rule 42, but the investigation ends up in many issues and many pressure and many nuisance from both sides, that it result into many other aspects of the our compliances. So to avoid any unnecessary, please take care of this. Rule 42 is very important, that you must have reversed the credit under Rule 42. Otherwise, you will land up in the situation that your investigation is only initiated on because of this ground Rule 42 only. Now, as my learned friend Tushar has also discussed about the reversal of credit on non-payment to vendor within 180 days. Yes, of course, we must comply with at the end of the year. But what litigations are going on this? First of all, what is happening that the taxpayers are facing issue in providing this data. How so? Because we have a habit to maintain the ITC register based on the data of the supplies made by the supplier, but we do not capture the invoice payment date in that register. Now, what the authorities are asking from the recipient, and sometimes they give only 5 days, 10 days to submit the data. They're asking that we have to put payment date in the ITC register. So certainly we can ask them to relax this requirement, because we can show otherwise also to demonstrate them that there is no delayed payment in this case. But definitely going forward, and especially for 22 and onwards, and if possible, we can also maintain for last 4-5 years also, that we start to capture payment date also in our accounting softwares of the corresponding invoice, and therefore that should be captured in our input register to avoid any unnecessary litigation. Tushar has also discussed about Rule 37. So friends, for the past litigation, now this amendment in Rule 37 has given me a chance to argue this matter, that prior to this rule amendment in Rule 37, which prescribed me the method of reversal of credit through GST or 3B on non-payment to vendor. Earlier, they said that you have to report it in GST 2 and 3B, or sorry, GST 2, which is not the available mechanism to me. So there was no proper mechanism available with me for reversal of credit prior to the amendment in Rule 37, and we can certainly fight on this aspect. Secondly, as I always recommend, if we want to litigate on this aspect, that I have a constitutional right under Article 19G to have a terms with my suppliers and buyers. If my suppliers contractually allowing me to pay within 9 months, then how a GST can interfere into that I have compulsory required to pay within 6 months. And if you go with an intent of introducing this clause of 180 days, the government says that council said we want to support MSME sector, and we want to curb this fake invoicing. Therefore, we are introducing this. But at this stage, this provision is blindly applied on everyone, irrespective of the fact that other side itself has allowed me the period more than 6 months for paying the consideration or for many reasons. So therefore, this point can also be litigated. But yes, of course, I have to take care of this 180 days aspect at the year end. And as I said, please start to capture payment date in your accounting software as well as for the past in your ITC register, so that in future, whenever government asks you, whenever the department asks you to submit the data, you would be able to in a position to submit this data. Now, one aspect which is introduced in this financial year 2023 is that we cannot reduce the ITC auto-populated in GST 3B, which is coming coming from 2B. So the government has introduced that your credit will be auto-populated. You cannot reduce it in the auto-populated, but you can reduce in the subsequent columns, temporary reversal or the permanent reversal. So one of the issue which is also highlighted by Tushar during his ITC deliberation, that there is a gap between the accounting treatment and the ITC auto population, that we are not captured the invoices in the accounting system, but those invoices have been coming in GST 3B and the credit is auto populated in 3B. So because of the different practices of the maintaining ITC register, the industries are facing challenges to implement it. But I am of the view that there is now no other option to follow this mechanism of GST 3B auto-populated. So please adopt and basically coordinate with your existing system to the new system. And from this, at least April 2020-23 onwards, start to comply with this auto-populated aspect, that you must take the credit auto-populated and temporarily reduce the credit which you have not accounted for. And you can take in subsequent period by adding in the auto-populated credit, but please start to comply with this aspect of GST 3B auto-populated credit. Friends, now we have also discussed during our deliberations of today that RCM liability needs to be checked at year end whether we are duly comply with the RCM liabilities or not. I have recently encountered with an issue that one person from last 5 years was not paying a tax under RCM for the services received from some local authority. To me, it is very strange that how you can say that I was not aware, when simply what we can do, it's very easy at certain point of time. Some things are very easy to identify, that if the supplier has not charged the tax on its invoice, or the supplier is not registered and even not issuing the invoices to you, then you can certainly verify from your tax consultants or the professionals that or the supplier itself, that why you are not charging tax to me, whether it is exempted. If they come across that this service is not exempted, then they will definitely come across that they are supposed to pay tax under RCM. So you must ensure, it's a very easy exercise, that on whatever invoices you have not been charged tax, you check whether the supplier is unregistered or those supplies are coming under RCM or not. So we must apply this very easy technique to avoid any unnecessary litigation. Now, in these cases, one aspect which I can discuss, that if you encounter with the situation that you have not paid the tax under RCM, now what the investigation authorities are doing, that they are forcing to pay tax under section 74 because they want the penalty of 15% from you also. Now, my humble submission is that as we are discussing, that the credit of RCM is can be availed if that the case is of unregistered supplier, and we have to suppose we are required to raise the self-invoicing. Now, if we pay the tax under section 74, our eligibility get exhausted because of section 17(5)(h). So therefore, what we should do, we should argue this, at least if we are paying it, then we should paid it under section 73 and not the section 74, so that our eligibility of credit shall not get exhausted because of the payment under section 74. As Simran has discussed, that we should take care of the invoices under RCM on the services received from the unregistered suppliers. There is a statutory requirement as discussed by Simran that we are supposed to raise an invoice in case of supplies received from unregistered supplier. And friends, I have seen the show cause notices to deny the credit because the credit of RCM is eligible based on the invoices raised by the recipient itself under section 313F, which is a self-invoicing for the services received from the unregistered supplier. So if you are not receiving invoices, the valid document under Rule 36 is the self-invoice. So the department is denying the credit on this aspect. Definitely, I'm able to succeed in 2-3 matters on the procedural lapse and correction of that procedural compliance at later stage. But definitely, it would result into undue litigation, and we can take care of the same. Now, coming to this one very important aspect, as we are knowing that this Safari retreat, the judgment of Honorable Odisha High Court is pending before the Honorable Supreme Court, and its outcome, its final outcome is differing from last 3 months. Now, what is the issue in that case is that if the construction is done for our own, the facts of that case is pertaining to the construction of a building for further leasing. But that could be other situations also, that if a professional, if a chartered accountant, if a company secretary is getting construction of his office for providing the chartered accountancy services, or there may be different aspect. We are getting manufactured our factory for production of the goods. So section 17(5)(c) and D denies the credit to me. But Safari retreats dealing with the aspect that they have constructed the building for further leasing. They have allowed the credit. Now, since Supreme Court judgment is pending on this aspect, what at least if you have not availed the credit in past years, I have always recommend to reserve your credit. But if at least you have not availed in the past year, but for 2023 onwards, and you have a good chance to avail this credit, keep it with you till the final outcome of the Supreme Court. And definitely there will be a fair chances that after the Supreme Court judgment, if that principle emerges that credit should be allowed on this construction service as well, then you would be benefited with a huge credit. So you can avail those credits which you have spent on the construction services of immovable property. Then you can take the credit. And definitely today also, what the people are doing, I have seen, they're ignoring the plant and machinery part. They are giving the contract for movable as well as immovable combinedly with a single consideration. They should take care that credit of plant and machinery and movable is still allowed without any doubt under section 17(5)(c) and D. There is no coverage of the movable and plant and machinery. So you can avail the credit today also. So please try and to do the planning, or basically do the proper due diligence on this aspect of construction of immovable property, where plant and machinery is also involved, where movable furnitures are also involved. Please take care of that aspect and take the credit appropriately to basically. Now the next question is, as discussed by my learned friend Shivam, that ISD people are still taking the full credit at head offices, and as highlighted by Shivam, that the issue is still going on, and you will definitely land up in the problem if you do not follow the ISD or the cross-charge mechanism. So the issue has already been discussed in detail by Shivam, so I will not touch upon that issue. Now coming to the outwards.
Sorry, Pavanji, we are going to time about, please.
5 minutes, sir. 5 minutes.
Okay, sir. Okay.
5 minutes. Okay. Now coming to the outward supply issue, that we should take care of the certain factors which I will discuss point wise. That post-sale discount in outward supply, post-sale discount adjustment is allowed only if we have a writ agreement. So please take care. I have seen you have an arrangement of post-sale discount, but that is not captured in writing anywhere, either in the agreement or certain documents which you have thrown through your advertisements or promotion pamphlet. So you should take care of that. Your post-sale discount is captured in writing. Secondly, people are issuing the credit note even after the lapse of the period which is available, that is the November. So you should not issue the credit note. And although there is a mechanism already available with the buyer to avail the refund, but now the proper mechanism has been provided to the recipient to avail the refund where he has not received the services, and the time period to issue the credit note lapses, especially in real estate sector or the insurance sector, as they have given the example. So we can go for the refund rather than taking the risk of issuing the credit note post the available period to us. One last aspect I want to highlight very importantly, that in this year, one important judgment of the Honorable Supreme Court has come on the secondment of employees. So this secondment of employees is not a basically the judgment has been given on the facts of a certain particular facts of a case. Now what we can do, we can analyze our scenario also, and if we feel with the help of the professional advice that tax is payable, then we should comply with those law, because people are getting notices on the secondment of employees, the tax liability based on the Supreme Court judgment. But if you are getting the notices, or if you have a secondment arrangement, then equally we should not pay the tax blindly on this based on the Supreme Court judge, because we can analyze our particular facts, because the Honorable Supreme Court very clearly said that we are giving the judgment based on the facts of a particular case. So with that, I would like to finish my deliberation, and over to you, Nandaji. Thank you. Thanks a lot.
Thank you.